Oh boy, here we go again. Back to work. Hope you guys had a fantastic day. So much for that short squeeze, right? Luckily, though, we had a game plan if the market kept going today. Hope you guys made some money out there today. Well, we're back to work tonight, though, right? Tuesday evening, getting ready for Wednesday's trading session. I got a lot of great trades setting up for tomorrow. Got some big moves on the charts today that smells like some big opportunities for some money tomorrow. I'm going to cover all my favorite trades in tonight's video that we get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, we have a lot to cover here, a very important video newsletter. Before we jump in, though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoyed the video tonight, do me a favor. Will you hit that like button? I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready to make some money on Wednesday. What's Wednesday going to bring us? Where are the low-hanging fruit? Where's the low-risk, high-reward 5x, 10x, 15x trades setting up for Wednesday's trading session? Well, again, as I mentioned earlier, we did not get that short squeeze that we all hoped for here today. But again, we had a good game plan to make some money going lower. Big moves going down here, right? Big moves going lower here on the Nasdaq and the S&P. We're definitely bearish right now. I have 3 different pullback trades I'm watching for. Everyone's waiting for pullbacks, right? Everybody wants to sell the bounce off this low right now. We're back to that bear bias here once again. I've got 3 ways to sell the pullback here tomorrow. We're going to cover that in tonight's video. I also, though, have 2 different reversals. I know, dare I say it, I can't resist. We got 2 really nice potential reversal setups I'm watching for tomorrow. I know I don't think I'm crazy right now, but you'll see why I say that here as we go into the video here tonight. We'll talk about those 2 reversals as we go deeper into this lesson. Oil feeling pretty bullish right now. Oil's feeling pretty bullish. Got a rotation off the low. It smells like 90. It smells like 91 coming tomorrow. We saw some news out of the White House today, potential rollover. We got some big news, big energy news coming tomorrow. So a little bit more bullish right now on the oil. A lot more bullish on oil than I am on the Nasdaq and the S&P. Not to worry, though. We're going to cover the long side. We're going to cover the short side in tonight's video. And by the time we're done tonight, you'll have a game plan to make some money tomorrow. Speaking of tomorrow, though, let's not just jump right in. Let's all get in the same page here for tomorrow. Tomorrow, of course, is a Wednesday. We have another inflation report coming tomorrow, 8:30 Eastern time. That is the PPI number, kind of like the little brother or the cousin of the CPI report. No, we're probably not going to see as dramatic of a reaction tomorrow, but that is probably one of the bigger news events here for tomorrow. We also have a couple things for oil tomorrow. Oil, of course, is going to be on our radar for tomorrow. We have the weekly inventory report. We also are watching for rollover on oil right now. We're currently on, the 10-22 contract right now. It's looking like we might be rolling over to the 11-22 contract on oil at some point, maybe tomorrow or Thursday. So keep an eye on the oil rollover. Remember, oil rolls over every 1 month, so it's a little more active rollover on that. And then don't forget, really the big news tomorrow is we're supposed to be hearing a very big announcement out of the EU tomorrow regarding energy program, energy stimulus, energy. We heard from Germany today talking about how they're working on solidifying their energy program going into the winter kind of cool off. So a lot of big energy numbers coming out tomorrow. We got, of course, the petroleum status report. Will we hear from the EU tomorrow regarding their energy stimulus, energy announcement tomorrow? Oil definitely is something we're going to keep on our radar tomorrow morning. Also, too, don't forget tomorrow we really have something pretty almost historic, right? Tomorrow we have the meeting, the very highly anticipated meeting of President Xi in China and President Putin in Russia. We know they're very aligned as far as the invasion of Ukraine right now. So boy, wouldn't we love to be a fly on the wall in that meeting tomorrow? At some point tomorrow, we're probably going to start seeing headlines coming out of their meeting. President Xi of China, President Putin of Russia. I have no idea what the markets will think about that, but I can tell you one thing. I'll be watching closely for those updates tomorrow in our trade room. So we know we have news at 8:30 and 10:30. We're watching to see what happens out of that Xi and Putin meeting. We're watching to see what's going to happen out of the EU energy announcement, and we'll see if we get rollover on crude tomorrow. It's shaping up to be a busy day tomorrow. We got more coming on Thursday, too. We got retail sales. We got quad witching on Friday. Oh, boy. This week's going to keep on pumping out some big moves here for us, and I'm excited just talking about it. Back to our charts, though, here, guys. I'm going to cover all my favorite trades on each of these markets here tonight. Whether you trade one of them or you trade all of them, make sure you watch all the way to the end because I'll provide different trade ideas, different strategies as we go deeper. You're going to learn something new throughout the entire lesson tonight, and I'll give you some reasons to stick around all the way to the end. So make sure you tune in, grab some notepads, take some screenshots, and if you get any questions, drop questions in the comment section. Why don't we let's grab the NASDAQ here first. We'll go NASDAQ, S&P, and we'll wrap things up here on the crude oil. Again, crude could be a pretty active day for us tomorrow. Over on the NASDAQ here, first of all, a 4,000 tick chart on the NASDAQ. You can see all the time frames listed in the upper left-hand corner. Also be aware what applies to the NASDAQ can be applied to the S&P. The S&P and the NASDAQ are pretty much identical, so whatever I say on the NASDAQ, you can pretty much assume it's going to apply on the S&P and vice versa. There are really three key components here right now, three key insights here that tell us where the best money-making trades are for tomorrow. The first one, of course, is this overall bear bias. It's kind of funny because yesterday was the first time I mentioned a bull bias in a few weeks, right? We're back to a bear bias right now. And I say bear bias, look at a 4-hour chart, look at a daily chart, right? That's what I'm talking about, right? The overall momentum, long-term momentum is bearish. That tells me that if I can, I'd like to be a seller in situations like this, going along with this obviously second big clue, which is a strong move down. We talked about this yesterday. We talk about this pretty much every evening on these videos. Anytime we see a strong move in one direction, what do we expect? We expect a pullback and a retest of that low. Once we get the pullback, and of course with this bear move down, right, we assume bears are coming in and trying to sell that pullback, right, at resistance overhead. Anytime we see a strong move in one direction, we expect to see a pullback. Bears will come in to sell it. They'll want to take their profit off at that low. And then from there, it's a matter of, do we bounce off that low for a possible reversal, dare I say, or do we break out going lower, right? Get some levels waiting here below us if we can crack below 12,000, right? So strong move down says, look for that short, look for that retest. And then once we retest there, do we get that reversal off the low or do we get that breakout going lower, which it doesn't seem very likely for tomorrow. It's quite rare to have a big move one day and follow it up with another big day. It's relatively rare for markets to make two really big moves in one day. So tomorrow is more likely to kind of even out into a range eventually. The third key insight on this, it sounds very similar. It's a big move down. Now, what does a big move down tell us? Well, think about it. Tomorrow, right, you're probably going to see the markets open up pretty bullish, right? I would imagine you'll think a lot of traders right now say, wait a second, this is too low to sell down here, right? So what's the difference? A big move, what does a big move tell us? A big move tells us to wait for a really deep pullback, right? A strong move tells us to look for a pullback, right? A big move says wait for a deeper pullback. Now, how deep? How deep is a deep pullback? The way that I always teach to my students is a deep pullback right when it starts to feel like the market has turned bullish in this example. That's about when it's deep enough and you want to look for that short back down again. So think about these three key insights, right? We're overall bearish. We're obviously short-term bearish right now as well. Strong move down says be ready to sell a pullback. The big move down says don't be surprised if that pullback is really large. How large? Just about the time when you start thinking, oh my goodness, is this a reversal? Bingo, that's usually when the pullback is deep enough. So whenever I have these situations, big move, strong move, there really are three different pullbacks I like to look for. I'm going to talk about how to sell these pullbacks here now, and we'll talk about how to trade the reversals a little bit later on here, right? So three types of pullbacks you want to think about, all right? The first one is a shallow pullback. Now, on a shallow pullback, we want to basically look for some levels of resistance, right? So prior swings, channel high. What you want to think about, though, with a shallow pullback is what's the problem with a shallow pullback? it's not high enough to really give the bears a good incentive to get back into this market. You have to think there's going to be a lot of bears out here coming in tomorrow saying, you know what, I don't want to sell way down here, but I would gladly sell way up here. Right? I would gladly sell at a much higher price. Whenever we see a big move, shallow pullbacks are possible because of the strength of this move lower, right? It's going to want to roll over and go right back to that low again. A shallow pullback, though, we have to think now we're not going to have as many sellers that are interested in a shallow pullback. And so when I don't have a lot of the bears coming in to sell high, I have to trap in some of the buyers. You know there are going to be a lot of bottom pickers on this. When this market opens up overnight in Asia, you're probably going to see some bullishness. Because obviously people who are looking at this as being too low to sell, they're going to think, okay, I can buy this, right? I can buy this thing as it pulls back off this low. We want to trap some of those buyers in and basically use what I call a two-try trap to sell it back down. So the first type of pullback is a shallow pullback. Shallow pullbacks, the concern is we're not going to have as many bears getting in, which of course is necessary to make this market go back down again. We're going to try to trap in some of these buyers who are trying to push this thing higher and will sell right into those stops for a retest of that low. Shallow pullback trap. Now, the next one is we get up around the high of that channel. Right? Now we're talking about something a little more attractive now to the bears. What will happen though in this situation though is as we go higher, there'll be a lot of inexperienced traders out there that will look at this and think, oh my goodness, maybe this has reversed. You know, I knew we went too far. There was some weekly pivot down here, right? I told you I'm going to buy that pullback, right? Now remember, anytime we see a very strong move down, the odds are almost guaranteed. They're in the upper 80s, low 90 percentile of getting a retest of that low. If I can get the buyers coming in and trying to buy that pullback, you think about where the stops are, right? Think about where their stops are, and we're going to use those stops for fuel to go back down to retest the low. Look for a nice juicy signal candle. Look for that short going lower. Now remember, where's the objective? The objective is to go back to retest the low. So now as the moving average rolls over now as long as I can get that pullback, and I try to tell my students in the trade room, try to get that pullback above the halfway point of that overall pullback. Does that make sense? Right? So again, the failure off the high is pretty easy, right? Up into resistance, trapping the buyers above the moving average. And then as it rolls over and grab that pullback, the best kind of advice I give to all of our students in the trade room is think about how big that overall pullback was. Think about where the halfway point on that is and try to make sure you're getting in above the halfway point. And the reason for that is it allows you to get a good balanced risk-reward ratio. You'll notice that halfway point is a very popular area where bears will kind of add to their position before we go back and retest that low. Now, let's talk about the deep pullback. Okay, the deep pullback. And again, the deep pullback is how deep? Right when that little voice in your head starts saying, oh my goodness, maybe this is a reversal. Maybe it's going to go all the way back up again. It's probably not going. It might. It's probably not going to, though, right? Probably not going to. Anytime we see a real big move like this, it's usually those deep pullbacks that fool everybody, right? They fool the sellers even to jump and ship and thinking we're now a buyer now. We want to get it up. If I head up my way tomorrow, we'd be right up around this 12,450, 12,455, 12,410 area. That's the spot you want. Now, this is the money-making pattern right here. This is one of my favorite combination setups. As we go higher, right? Now remember, at this point now, it's not just the buyers who were saying, I told you so, I'm buying this. It's now a lot of the sellers, a lot of the bears who were originally very, very bearish. Now they've been convinced, oh my goodness, maybe that oversold indicator was correct, right? Maybe the RSI divergence was correct. I'm kidding with you, obviously. Now, more buyers will come in. Let them try once. Let them try twice. Use the slight variation, which we call the two-try failure. Makes sense, right? There's going to be more buyers up here now getting kind of roped into this. Let those buyers try twice. Look for those lower lows. Buyers want to buy low. Once we know where those lows are, we know exactly where their stops are, and we can now look for that short down into those stops. Now, one very common kind of aspect of a really deep pullback in a big bear trend like this is when the market drops I'd love to get that pullback. I mean, trust me, I'd love to get that first pullback like I just mentioned. That pullback would be great, right? A failure into pullback combination. But I'm telling you right now, oftentimes these moves back down can be very, very sharp and move very low, right? They're very, very fast. So we don't oftentimes get that pullback. We usually get is it'll really drop like this, and you'll get this shallow pullback like that, right? You won't get that pullback as it comes. Watch that prior swing and grab that trap off the high. Oftentimes, these will line up off the high of a new channel. So mark off that low, up off that. It makes sense, right? So we call these, again, these are called two try failures, 1, 2. And then again, at this point now, all those buyers oftentimes get trapped, and the market now will roll over. As it rolls over, now we look for that, again, a trap setup, we call these, to finish off that move back down to retest the low. We see a lot of these right now, those deep pullbacks, two try failures, right, and those traps. Now, guys, I've talked a lot about failures and traps so far. I know that most of you guys watching this video right now, you've already learned all these setups. I get so many great emails and comments about how you guys are making money with these. But listen, if you're here for the first time today, if you're one of the few folks who haven't learned these entry patterns, you're not making money with these yet, what I'll do is I'll put a link up here for you in the upper right-hand corner so you can learn all these entry setups. If you're one of the folks who haven't done it yet, the strategy I teach, I'll put a little pop-up there for you. The strategy I teach in that free trading class will get you into more winners, help you avoid easy losses, and most importantly, it'll give you a roadmap to follow each day, which for me gives me a ton of confidence. The free trading course, that link that just popped up right there, is perfect for someone trying to make the jump into full-time trading. If you're missing too many winning trades, if you're taking too many losses, you definitely owe it to yourself to grab that link that popped up there, take the free course, learn all these setups. That way, next time I say deep pullback, two try failure into a bull trap off that high, you'll know exactly what I'm talking about. All right, those are 3 different pullbacks I can use here. Now, you must be wondering right now, right? You must be wondering, okay, Joe, at what point when this thing goes higher, at what point can I be a buyer? Right? At what point does a deep pullback turn into a reversal? Well, it really has to do with how the market pulls back once we get up there. So, for example, and we talked about this last night for that big move down, right? If you recall last night, I talked about if the market makes a big move and rolls over and keeps going, that's your sign. This ain't no squeeze, right? This is a bear market. So we know a lot of the same principles are going to apply here. If we get that deep pullback, but we do not get those bears to try, right, and then drop like we expect to have for tomorrow, if they do hold that pullback and blast off the moving average, what do we call that? We call that a 1, 2, 3 reversal. These are very, very easy patterns. The hardest part about them is not forcing them, right? Because we can't take that first one, right? It's just not a very good trade. It isn't a very high probability trade. The better trade here now is to mark a trend line off that high, find a channel off of that low, exactly what worked as the market went lower, right? Once it went lower, draw that channel right off that high and sell that first test. Same basic idea. This, of course, is called a 1, 2, 3 reversal. My favorite entry on this, again, we make it that deep, deep pullback. The buyers come out of nowhere, right? I have no idea why that might happen tomorrow. It could easily happen. Anything is possible. Look what happened today. So be prepared for it, right? We go up, we pull back, and we blast and jump off that 21 moving average. Now, mark off that high, drill down, and again, I love that first test trap off of that low. Could be a trap, could be a failure, could be a pullback setup, any of the setups you guys learn in that free trading course that I mentioned a few minutes ago, right? A really easy objective here right now is that prior week close, right? Last week's close. It does seem a bit unrealistic to go all the way back up. I mean, this thing went like 1,000 points today. So it's like I said, it's going to be very rare to see a market go one big move today and another big move the next day. What's more likely is to get that deep pullback, that retest of that low, and then bounce and get that reversal off the low and then into some sort of trading range. Which reminds me, how do we take that reversal off that low? Can I buy off of that low? Oh, and by the way, what if we go lower here? What's the game plan if we keep going? Well, that's a really good question. Let's keep going. Right, over on the S&P now. And again, keep in mind, right, the S&P and Nasdaq are very, very similar. We got a bear bias here overall. Again, a very strong move lower says be ready for a pullback and a retest. The size of the move lower says be ready for a deep pullback. Wait, how deep? Deep enough to make you think, oh my goodness, maybe this has reversed. Right when that little voice in my head starts saying, man, this could be a reversal. Bingo! That's about right when you're trying to look for a short back down again. We've talked about those 3 pullbacks, right? That shallow pullback trap, that modest pullback failure into pullback combo, and we talked about that deep pullback with the 1, the 2, and then again, that bull trap for the entry going lower. That's my favorite, right? My favorite here for tomorrow. And we also talked about if the buyers can hold that and go, we talked about if we're going to grab that new channel, right? And then grab that first test as we go higher. Pretty straightforward there. Now, let's say, for example, let's say we get that dream come true, big, deep pullback. We go back to that low now. How do I buy off the low? What's my problem, right? What's my challenge? My challenge is we're very bearish at that point. So now we find ourselves back at that low, right? It's a great place to be a buyer. But I always tell my students in trade room, there's always 2 questions you want to ask. What is my location and what does my momentum look like? All right? These are 2 questions you should always be able to answer. For example, location. Location is fantastic to be a buyer down there. Why? Because we're at support, right? We've already retested the low. Great place to be a buyer. Perfect location to buy. However, there's one big problem. Yeah, momentum. Momentum is not very bullish. So in order for me to make money consistently, trying to pick a bottom, we need 3 things to pick a bottom in this market. You ready? One of them is we need a turning point. We need some major turning point, like a double bottom after a really big move down. Second thing is we need signs of exhaustion. See if I can spell this correctly. We need signs of exhaustion. Okay, we call that the 2-try rule. And the third thing is we need some sort of catalyst, right? Some sort of catalyst. And my favorite catalyst, and should be your favorite too, is a stop run, right? The easiest money you're ever going to make in trading is when you are at a major turning point, seeing signs of exhaustion, and you get those stop run, right? Okay, so think about what is said. Again, in this example, we've already got that short off the high, right? The smart money now is taking their profit down at the low. Now, that's a great turning point. At this point now, we got to see signs of exhaustion. What do signs of exhaustion look like? The 2-try rule. Now, if I'm a seller, I want to sell high. Okay, buyers want to buy low. Sellers, we want to sell high. The reason I mention this is because, well, first of all, horrible place to be a seller, right? Can we all agree on that, right? The worst possible spot to be a seller is after a big move down and then sell right into that low. You know what I mean? After a retest of that low, right? Because now all the professionals are getting out of their positions now. Anyways, so at this point now, I want to see bears try twice and they want to sell high. Okay, I mention this because this is one of the most common mistakes people make when they try to pick bottoms in a bear market. Okay, again, major turning point is hit. Now think about it. Bears try once. Do we get fresh sellers in the market with a lower high? We don't. We need a higher high in price to attract more bears in. Why are more bears better? Why do I want more bears in? Because again, step 3, I need a stop run. Right? At this point now, bears try once. Patient bears come in, they try again. Everybody's trapped in now. Now I've got those stops, right? And that's where I can use that stop run to my advantage and run it back up. Where's a good target now overhead? It's easy. It's right back to that level up overhead. Okay? These are pretty easy trades, but you can't force them. Okay? You can't force them. Okay? And remember, we're not looking for this pattern right now. It's very tempting right now to want to pick a bottom on a market like this, but this is not my favorite way to do this. You can wind up trying to pick bottoms on bear markets until you bleed your account to zero. All right, so be very careful after a strong move down. Be very careful trying to pick a bottom with that same pattern. That's why I say it's much better to wait for the pullback, get the short going on, take the profit down here. Once we retest, now everybody's happy. The bears already made their money, right? The bears are kicking back. They get a cigar, right? They're happy bears at that point now. And then we get the weekend bears coming in. 1, 2, trap them in, and we can buy off of that back up to retest that high. And I'll tell you, this is, it doesn't seem very likely for tomorrow, but this is definitely where moving average comes over, right? Moving average comes over. We take out the opposite side, right? Buyers pull back and they blast off the moving average. That's a reversal, folks. That's a reversal, right? So 2 try failure off the low, my favorite one. Or we get that 1, 2 jump, right? Once it jumps, we now know it's on, baby. Mark that high, mark that low, find that prior swing, right? And get in off that first test is the best test. Again, think about last week's close. I'll tell you, I would not be upset with that at all, right? If this was our day tomorrow morning, I would not complain at all. Sell the deep pullback, buy the 2 try failure, rip it as it reverses going higher here. I like that, right? What do you think, right? Is that a good game plan for the sell, the buy, and the reversal? Let me know in the comments section. I'd love to know whether you think I'm absolutely crazy right now or if you agree with me on this one. Now, one more thing I want to talk about here is what if we keep going lower? What's the game plan if this market now keeps going lower? The game plan doesn't change a bit. Okay, that is the nice part about this game plan for tomorrow. If we keep going lower, we're still going to look for, now what I will do is I'll adjust these levels down a little bit, right? So we'll have to kind of bring these levels down a little bit. What I'll do is I'll look for that up into resistance, shallow pullback, trap. Why? Because traps allow us to sell as high as possible, right? In a shallow pullback. In a shallow pullback, my concern is selling too low. Or we keep grinding lower, right? We pop up, buyers come in, they try to buy the pullback, we trap them in above the moving average, and we're selling that failure into pullback combination. Same thing. Or we keep on grinding down, right? Grinding down, big pop up, possibly all the way back to 4,000. Who knows? Right? Remember, this could easily spring back higher here because nobody wants to sell down there, and you will likely have accumulation of buyers, right? The deep pocket buyers, of course, right? Not the day trader buyers, but the longer term position buyers. The nice thing about this contract right now is we just had rollover. We just hit the December contract, so you could easily start to build a bigger long position, obviously very deep pockets, very risk averse. The hardest part about swing trading on futures is the rollover. So you got a couple months right now to build a big position if you're, if you're that type of trader. Anyways, long story short, wait for that deep pullback. How deep? How deep? Right when that little voice in your head says, "Oh my goodness, maybe it's a bull reversal." No, probably not going to be 1, 2, and then grab that trap right back down again. Same basic idea here. And again, if we do grind down, pop up, and find our way back down at that low, it's that same idea, right? Bears want to come in and sell high. Think about those stops for that punch back up to retest that high. Right? If we come over and the buyers can hold it and blast, we end up getting that reversal, find that new channel, and don't miss that first test from there. Now, what if we ended up back to the high of this trading range right here? What if we came up here? How would I sell it back down again? Because again, you got to be thinking whenever we see a really big move in one day, we're probably going to end up in some sort of range tomorrow. We just don't exactly know where it is. Ranges are very common after a really big move one day. You want to keep thinking about the hard part about this, we don't know exactly how big that range is yet, but oftentimes these ranges can be pretty big. What you want to keep on focused on is trapping in the buyers up here. Okay, I'm not going to try to step in front of that. I'm not selling, just blindly selling it. The easier money is to wait for the buyers to commit, let them show you their cards, and then use their stops for that run back down to retest the low. Buy low, sell high, trapping in the buyers off the high, trapping in the sellers off the low, trying to avoid the middle of that trading range. You'll learn a lot more about ranges, how to fade breakouts and ranges. I cover a lot more details on range-bound markets in that free trading course linked up in the upper right-hand corner. Okay, I think we have a pretty good game plan here now for the deep pullback, the possible reversal. What do you think? Let me know in the comment section below. I'd love to hear what you agree or disagree with me on. I always appreciate you guys. Give me your feedback. Let's wrap it up tonight here on the crude oil, the black gold. Tomorrow, a lot going on here for energy markets tomorrow. We get potential rollover for tomorrow. It's not looking like a rollover for tomorrow, but probably either tomorrow or Thursday will be rollover on the oil. And again, we have that big energy announcement coming out of the EU tomorrow. So we definitely have that on our radar. We've got 3 key insights. Really, it's 2 key insights. Oil is very much mixed right now. Now, why would I say mixed? Why do I say it's a mixed bias? Well, if you look at a daily chart or a 4-hour chart, you'll definitely see the overall direction is bearish. But open up a 4-hour chart on the oil right now, and you'll see a beautiful 2-try trap, which I just mentioned earlier. If you go to a 4-hour chart right now, you'll see we basically popped up the bears once, bears twice, and we just had a beautiful trap low on a 4-hour time frame. You'll see it. Open a 4-hour chart, and you'll see that beautiful trap low on that 4-hour. Combine that with the fact that we heard from an announcement this afternoon from the White House. I'm not sure who's doing the books over there right now, but they thought it was a good idea to refill the strategic reserve at $80 a barrel, which seems a little bit outrageous. But hey, maybe that's just me, right? Luckily, I don't run the country. But we did see a lot of news over this afternoon regarding oil price, and of course news coming tomorrow. What's the biggest key? What's the biggest key though? We definitely have a range rotation off the low. This is the biggest key I see here right now. So again, I like the idea of the 4-hour chart giving us this little bear trap going lower. The biggest one I see right now is this range. Market spends its time in the range today. It runs lower, it retests, and now we've got kind of this little pop and grind going higher. The market now looks like, and keep in mind, oil is very much news driven right now, but it looks like oil now is going to try to rotate back off the low of that trading range and ideally take out some of these highs, right? Up around 89.31, $90 a barrel, 90.39 appears to be a good spot. And from what we can see right now, again, remember, news is very much the driver of oil right now, but if the pendulum swing, if the amount below this trading range right now, if that is symmetrical, we're looking at 91 here at some point here for tomorrow. Again, a lot of this though is depending on the news we hear out of the EU overnight, and we'll see if they double down on that the petroleum reserve idea in the overnight as well. So how do we make money on this? Well, buyers have a lot of options right now. They can buy a trap below that low. This is a really popular common pattern called the pop and grind pattern. Pop up, grind up. We see a lot of these in our trade room. That's one way the buyers can buy it, right? Another way would be, let's say they do retest that low. Same idea here now, right? Range above us. Ranges are magnets. We can now rope in. Remember, great spot. It's a great turning point. Right? Great spot to be a buyer, not great momentum to be a buyer. So we trap in the bears. 1, 2. Remember, higher highs in price. We look for those stop runs, and we try to run it back up into that trading range. A 2-try reversal, a double bottom reversal off of that low will be a great spot to be a buyer as well. And also, too, if we were able to get a strong punch going higher, anytime we see a strong move in one direction, we can probably go out and find a new channel and then look for another leg, right, going higher to complete that 91 pendulum swing. On the sell side, the bears have a very difficult job right now, right? If the bears want to go, if we go higher here, the bears can try to sell off this high, but they're really going to be careful because you get a lot of momentum coming off of that low. So if we rip higher here, be very careful, be very careful. Again, we do have an overall bear bias, but that little bear trap I talked about on the 4-hour chart really makes it difficult to call this a bear bias right now, so I'm calling it a mixed bias. Really at this point, the bears, they've got to get back to these lows, and they've got to keep this party going lower. They've really got to get us a good convincing breakout, because this breakout today was just not very convincing here on this on the price going below that trading range, right? So bears do not have as many options here as the buyers here. So again, kind of recap here, right? Get a beautiful trap low below that low, off the low of this channel. It's a classic case of a pop and grind with a trap entry right there, right? It's a good spot there for a trap. Remember, as I talk about in that free trading course, traps are very specific. We have to see a very strong reaction almost immediately off that swing level at 86.56, right? So if it does go lower, that's exactly where we now want to rope in the bears, because obviously the bears are strong. We thought they were going to be. Let them try a couple times, use those stops, right, and punch it back up with that 2-try failure. If the market rolls over, if we take out that low, we pull back to the moving average and we blast right off that moving average. There's that classic 1, 2, 3 breakdown. Mark off that low, mark off that high, find that prior swing, and grab that first test trap. Now, where's a good target on this? Remember, it's always first leg and third leg. Okay, we don't exactly know how big that first leg will be, but once we know how big that first leg is, the third leg, which will be anchored off that pullback there, that's how big that target now will be. Off top of my head right now, we got plenty of space to run. I got 83.65 all the way down to 81.20. 81.20, 81.50 is really kind of the big objective there for those bears. 81.5, let's call it, down around 81 even. So keep an eye on that. I would also imagine too, if we talked about a pop and a grind here, we may also see it, right, pop and grind down. You know, again, we've got more news coming tomorrow. If this thing takes a nosedive and then grinds down like that, just simply draw your trend line off that low, bring it up around that high, right? Look left, find some prior swings, and try to get up above those prior swings. That'll get you for a trap. Get above the 21 moving average. That'll get you in for a buyer failure. And again, like I said before, that first leg and that third leg will give you a good idea of where that final objective is. It's called the pop and grind, right? A pop and grind channel. We use something similar to that today, right, on the S&P and the Nasdaq going lower, right? That big pop down, that grinder down. Anyways, those are some easy ways to short this thing as we go lower. But again, be very careful selling into those lows here. I'd love to trap in some of those bears down here and buy it right back up again. As we go higher, be very careful being a seller. As we go higher, what you want to think about here is can we get, for example, can we get a strong blast higher? We want it to be pretty strong because, again, this range is a magnet. If we get a strong blast higher, then what I can do now is if the market really blasts, right, and runs higher here, I can go out, find a newer channel there, right, mark that high, mark that low. Think about now where we have some prior swings. Get under prior swings, get underneath the 21 moving average, bear trap, seller failure, pullback combination, plenty of ways we can buy off of that channel low. You'll see a lot of examples of those inside of that free course I mentioned earlier on in this video. Again, the key is going to be the strength of that pop. Right? I want to see a real strong pop going higher because if I get a strong pop, then I can pretty much bank on that first pullback. It's just a matter of trying to find the entry point, the entry setup at that point. Trap, failure, pullback combo. And again, if it really pops like that, take some profit off at that high and leave that runner because with all the news tomorrow, this could definitely be a runner, kind of a runaway move there if we get that squeeze going higher here. Keep an eye on that. This could also, it doesn't seem likely right now, but it may, pop up and grind higher, right? Pop and grind, easy. Mark off the high, mark off that low. Same basic idea, right? Same basic idea. Grab that first test off that low. I'll keep things simple here now, right? Trap, failure, pullback off of that low. Remember, very strong, right? I want to see a nice strong pop higher to clear that momentum hurdle. And once we have all that momentum, I can now buy that first test off that channel. What I would look for to be a seller up here is you want to think about that strong move up, that pullback, that retest, right? Remember, at this point, it's very bullish at this point. I know we're overall bearish, but I'm not a long-term trader. I'm a short-term trader. Okay, I assume if you're watching this video right now, you are probably a relatively short-term trader as well. The short-term momentum on this will be very, very bullish. So trying to sell into this right now is a gamble. It could easily keep on grinding and grinding higher. I'd rather go out, find a channel here, buy that first pullback off that channel, take my profit off at that high, and then once the buyers have now made their money, now rope in the weekend buyers once. Remember, buyers want to buy low, right? So lower lows. We need fresh buyers coming in as we go lower. When that happens, where are their stops? They're sitting right below that low. We can sell it right back down into that trading range. Targets on these are back at the other side of the range. And then, of course, the pendulum swing. The amount we went above, the amount we went below, that'll be where that next objective is as we go lower, right? Makes sense? So if we do get that pop up, buying that pullback, that double top reversal, 1, 2, and then back down into that trading range. Opposite range, pendulum swing target, right? That'll give you an idea of kind of where I'm looking for those targets here for tomorrow as well. Be careful, though, on that short. Again, be careful on that short. Don't go picking tops. Wait for it to retest. Wait for signs of exhaustion. And if you don't know what a retest or signs of exhaustion look like, that should be a very good clue to come out and join me tomorrow morning, every morning in our trade room. I will make sure you know exactly where the best trades will be tomorrow. I'll make sure you know exactly where the worst trades are, so you can skip the losses and grab those winners. Speaking of tomorrow, game plan's ready. Game plan's ready now. Tomorrow morning, we'll trade this stuff together in our trade room. We open up every morning, 8 o'clock Eastern time. It's a great place to learn and trade along. If you're missing too many winning trades or you're tired of taking so many losses, our trade room is the place to be every morning at the opening bell. I'll put all the membership links, all the free course links in the description of the YouTube video. I would definitely recommend start with the free classes first. Get your feet wet, get that going, make some money on that, and then that will you'll be primed and ready to go for trading with us soon in our morning trade room. Any questions here? Don't be afraid to call the office. I'm always here to help out. If you guys have questions along the way, you can always use live chat as well. And of course, you can always drop questions in the comment section below. Hopefully by now, though, you grab that free course to learn all the setups. If you enjoyed the video, hit that like button, and hopefully you'll subscribe to the channel, and I'll see you here same time, same place tomorrow. Tomorrow morning, though, 8 o'clock Eastern time, don't miss the trade room. If not, we'll come back tomorrow night, we'll rewind the tape, and we'll go back and get ready for the next trading day. My name is Joseph. Thanks for watching tonight. Be well, be nice to each other, and you better be here tomorrow, right? Adios, amigos. Bye-bye for now.